Now, one question before you.
Okay, so next we will start with, or we will, right now your credit entries are there in your GRIR account, whatever, maybe it is stock or maybe it is maybe freight. But for posting the invoice, we should have the tax component. That means by ignoring the tax also I can continue, but let's add the tax part. So tax is completely country specific settings and separate module is there. For example, in India, it is SIN module, country India version, and we have a different tax structure is there. In US point of view, you have a different tax structure, that is federal taxation. So separate SAP module is there. But I will give you some idea about, we will do the configuration so that at least some tax part will be there in our invoice. Okay, so let me give the idea. So this is known as tax on sale and tax on purchase. Tax on sale, tax on purchase. Whenever we are going to purchase anything, we have to pay the tax. When we are going to sell anything, we have to pay the tax. So how we are going to calculate the tax? So if we are going to manually calculate the tax, maybe you will calculate the tax in such a way. We have a base price. I'm not saying it is purchase price or selling price. I'm saying it is a base price. If it is there in the purchase invoice, then we can say it is purchase price. If it is there in the sales invoice, then it is sales price. So let's say your base price is 900. On this, that means it is related to purchase, if let's say. So 900. On this, we have a tax, like in different country, you will find different tax names or tax components. So let's say we have one tax is there, excise tax, which is 12% on base price. So you will calculate on 900, 12%. Then let's say tax on tax, says on excise. Previously, this was our tax structure. Now it is completely changed. Just I'm taking this example. So says 2%. Then maybe you have a tax components like VAT, value added tax, which is 5%. So this is one tax component, this is one tax component, this is one tax component. And VAT is all state used to they used to charge the tax, or if center used to calculate the tax, it is CST. But again, it is whatever the example I'm taking on the basis of based on India. So maybe in different country it is different one. So it is again purely country specific settings. So manually we calculated this one. If we are going to convert this mechanism in automated process, because in SAP no one is going to manually calculate the tax and they will put the amount in the invoice. So if we are going to convert this in an automated process, how we will configure it? So take this line as line 10 or line 1, line 100, whatever. This is line 20, line 30 and line 40. So how we will calculate this line 10? Line 10 we will not calculate. This is the input value. This value you will get it from your purchase invoice or sales invoice. That means this data is nothing but your GRIR data. So GRIR data will convert into invoice in purchase. Similarly in sales it will be your cost of goods sold. Sorry, it will be your selling price. And from where we will get the selling price, we will see from condition record we will get it. So that time we will see. So this will be your input value. Then this will be calculated, this excise will be calculated on line 10. So that means we have to develop one calculation procedure. So line 20 will be calculated on line 10 to line 10. So whatever the information is available here on this 12% will be calculated. So line 30 will be calculated on line 20 to line 20. And line 40 will be calculated. Line 40 means all together. So it will be calculated on line 10 to line 30. So this is how we are going to calculate this tax. whatever the amount we have calculated, so we need to post the accounting entries, either debit entry or credit entry. So we know whenever there will be any posting or any accounting entry will be there, we need the um, account determination key. Like you have BSX, you have this WRX. Similarly here also we have the account entries are there, account determination keys are there. So here also you will find some account determination keys. So these account determination keys are linked with your condition type. So what is this condition type? Condition, these are all your condition types. So condition type is something where we will carry the data. So that means what are the components you have? One is your base amount, or I will write it here so that it will be clear. So one is your condition. Okay, before that, let me give the idea. So tax on sale purchase means, for example, we purchased some material stock worth 50,000. This is our material price. Assume that your tax rate is 10%. So tax at the rate 10%, that means it is 50,000. This one is known as purchase tax, or technically it is known as input tax. Technically it is known as input tax, but in different country they used to name the different tax. For example, if it is, let's say, input VAT, input GST, or right now in India it is applicable GST, so input GST. So that means we can say GST on purchase. So technically it is known as input tax. Now we converted this 50,000 into finished product. That means we processed it and we converted into finished product. So now this product cost is, let's say, 1,20,000 selling price. On that also you need to pay the tax. $12,000. Technically this is known as output tax. Input tax and output tax. So accounting point of view, we will take this item as current asset and this one as current liability. Why it is current asset and why it is current liability? Because if you'll see this 12,000, which includes the this 12,000 include the 5,000. That means this sales value 1,20,000 includes the material cost of 50,000, because we have converted this 50,000 into finished product, or we converted the raw material into finished product, that is 1,20,000. So if you're, who is going to pay the tax? Tax will pay or tax will be collected from the consumer. If you're going to collect, because we paid 5,000, now at the time of sales we are going to pay the tax to the government 12,000. So this, we are manufacturer, we will recover this tax amount from the distributor. Distributor will recover the tax amount from retailer, and retailer from the consumer. So ultimately there will be double taxation on the consumer. So that's why whatever the tax already we paid, we can claim this as deduction. So already we paid to the government 5,000, so you can claim this 5,000 as deduction. Okay, so this 5,000 we can claim as deduction. So now it is net tax payable 7,000. This process in India is known as VAT credit, but it is nothing but settling the output tax, sorry, settling the input tax against your output tax. We're supposed to pay the tax 12,000, but actually we have to pay 7,000 because this 5,000 we deducted. So that means you can say this 5,000 as receivable. So this 5,000 is input tax I have taken as current asset. Receivables are your current asset. Now coming to the technicality. So we need one So we have something condition type, or account key. Base amount. For the base amount, this condition type we can create or we can use the SAP standard. So if I am going to use the SAP standard, it is BASB. And where we will update for this in tax, or right now we are going to create a tax procedure. Tax procedure means we are going to develop one automatic mechanism so that in system will calculate the tax both in sales and purchase. So tax procedure we are creating, and that tax procedure is created for one specific country, not for company code. So what is the account key for base amount? In base amount, in tax procedure, no account key is there, because this amount, as I told, we will get these values from different other accounts like your GRIR or sales. So already some condition types, or sorry, account keys are we have already assigned. For example, the GRIR, it is there in the WRX, right? That value we are going to take. Similarly, in future we are take the sales value under the PR00. So it is under the ERL. That information, it is already linked in a some different area, or with a some different condition type. So no need to worry about this. So this is not applicable. Then your output tax or sales tax. So output tax condition type we can configure, or if you're going to take the system MWAS and its corresponding account key MWS. Why we need the account key? Because under this account key we are going to assign the ledger. If you are having 5 multiple different taxes are there, so then 5 different account output conditions types will be there, and 5 different account keys will be there. Input tax, MW, VS, and account key VST. So this is for recording. How we will calculate this? We will calculate this with some tax codes, because on different material different tax codes are applicable, different tax rates are applicable, different customers are taxable in different way. So we need to create multiple tax codes. So these are the informations we are going to use, and I'm going to create a tax procedure. SAP is providing the tax procedure. Let me create a simple tax procedure. Financial accounting, global setting, tax on sale purchase, basic settings, check calculation procedure. Already there are so many tax procedures, country specific tax procedures available from SAP. Okay, already the tax procedures are there. Like these are the country specific tax procedures are there. Simply just assign this to your country and it will perfectly applicable. Okay, if we are going to calculate our tax procedure, then how we are going to calculate the tax procedure. But before that, you should have some idea about the condition type. So condition type is something technical, how to carry the data. Suppose you want to create a condition type. Suppose I want to create a condition type for tax, let's say input GST or something. So take something here. Input tax or input GST. Access sequence. Access sequence is one search strategy. Take the tax classification. Condition class. Taxes. Percentage. Tax category. Then amount percentage. Save it. So you can use this condition type in your tax procedure. So we will use the standard. Let's cancel it. Define procedure. New entry. Tax procedure something what we will take care of. 10. Tax procedure should not be created for any company code. It should be for any country. But again, for same country, we will use multiple tax procedures. So I am just going to name it with the same company code. But never tax procedure is created for any country. If one country, there are 10 company codes are there. One tax procedure is enough for 10 company code. Line select, double click on control data, new entry. Step number 110, whatever you can take. Add the condition type. So condition type is base BASB. Any input value required? No. Step number 20. Condition type output tax MWAS. And how we will calculate this? From to. On this base amount, we are going to calculate the output tax. So from 10 to 10. And whatever the amount we will calculate, we are going to record under one account determination key. Here it is MWS. If it is input tax, condition type is MWVS. This will be also calculated on line 10, because in case of purchase 10 is your base amount, in case of sale 10 is your base amount. Account key VST. Very simple tax procedure I created. If you are having multiple tax, then this will be multiple output tax will be there, multiple input tax will be there. But in that case, you need to create condition types, because once you assign MWS, that we can use with multiple different tax. So in this case, one condition type is required for this, and for this. Accordingly, the account determination key also. You need to assign to country to calculation procedure. Now here one calculation procedure, tax procedure is there. I'm going to remove it and I will add my tax procedure, which is WM10. So whenever you are doing a tax practice, tax related practice, make sure that your tax procedure should assign to the country. Otherwise, with all correct configuration, tax component or tax line will not be there. It's because someone maybe already removed this one, because in this client, your country is one, US. So we are keep on changing the tax procedure. So that's why make sure that your tax procedure should be assigned to the country. Right now, if the NL10, the user will try to post some entries, sales or purchase with tax, then in that case, it is not going to work, because already I removed it. If you want to create your own tax code, this account determination key. If you want to create your own account determination key, then we can create here. Check and change settings for tax processing. New entry. Tax type input or output. Let's say input. Not deductible. Not deductible means we are taking these lines are separate, because in future we will claim this from your output tax. Suppose this excise tax is not deductible. Let's say this item is not deductible from output tax. So in that case, no need to create a separate line. You just club with your base amount. So that is the meaning of not deductible. If it is deductible, then we will post in a separate line. Separate line item. Okay, cancel it. We are using the standard. Now create multiple tax codes. As I told, we need here tax codes for purchase and sales. So I'm going to create 4 tax codes. One tax code what we will take 0% input tax. Why we are taking this? For asset accounting in future it is required. Take this as W0, 0% input tax. One more, W1, 6%. This is the tax rate. Okay, input tax. W2, 0% output tax. W3, 8% output tax. Created 4 tax. I will create 4 tax codes. You can create multiple tax codes. Create certain ledgers here because we need 2 ledgers, one to record the purchase tax and one to record the sales tax. So what is the accounting entry? I will tell you. First create the ledger. So we will create the ledger input tax under current asset and output tax under current liability. Both are balance sheet items. Current liability, input tax 3504. Output. Select open item management. Open item management, why it is required? Because first we should have one open items. Then we are going to settle this amount with your input tax. So we need an open entry here. Sort key. Fill status group. Tax office clearing account. Then select the tax category. This one, output tax account, greater than symbol. So make sure that this tax category should correctly selected. If it is output tax, then select the output tax category and open item activated. Once you will, if you will create wrongly and you will post some transactions, then you can change it. So make sure that it should be output tax account. Save it. Create one input account. Current asset. Input tax account. Okay, I change it to input tax account. Now we will create the all the relevant tax codes. Transaction code FTXP, or you will get this option here in calculation. Define tax code for sales and purchase. Country. And before creating the tax code, make sure that your tax procedure should be assigned to the country. So tax code is W0, Give the description 0% input tax. Tax type input or output. Input. Select check ID. So we have activated 3 condition types. So base amount, output tax, input tax, MWNS and VST, the account key, and these are your condition types. So against the condition type input tax, update the tax rate. So in this case tax rate is 0. Save it. One more, W1, 6% input tax. Update the rate. %, output tax. %, output tax. Update. 8% output tax. So against your output tax, update. Okay, created, ledgers created. Now we need to assign this GL. Just one step, verify, because we are going to calculate the tax on certain items. So we are going to calculate tax on GRI item. So here make sure that this tax code should be allowed. So that time I allowed here. See, only input tax allowed minus. If it is tax account, then greater than and smaller than symbol. If it is on this account, if tax will be calculated, it is minus, only input tax allowed. And I activated posting without tax allowed. That means we can have one purchase entry with tax or otherwise without tax also. If exempted item, we can also deactivate. That means we can continue with posting without tax allowed. Then sales entry not yet created. Once we will create, that time in SD we will add it. Output tax. Okay, fine, continue. So then we need to assign these ledgers, or it is known as your account determination. So go to the transaction code OB40 or posting. Define tax account. Here you will find all the tax account type, sorry, account keys. If you have configured your own, you can see here, this is the configuration. Okay, when I did the this SIN module, that time I work here. So these are my configurations, but we are using the SAP standard. So MWS is your account determination key. So search it here. Output tax, MWS, and this output tax we will link it somewhere else also in pricing procedure in AST. Double click, save it, and add the ledger, output tax ledger 3504. Then VST, input tax, $3,005. As we are using here SAP standard account determination keys, posting keys are already there. If you have created your own account determination key, you need to specify the posting key, which posting key we are going to use for tax purchase and tax sales. Okay, here it is required. Next whatever the settings I will show you, it is one time activities. It is already there in the system, no need to do anything. Just make sure that tax determination rule should be defined. So what is this tax determination rule? Go to ST, sales and distribution, then basic functions, taxes, define tax determination rules. MWST, that means in future when we will create our pricing procedure, it is related to output tax. Output tax means in ST when we will create the pricing procedure, there we have to include one condition type as MWST. You just make a note of this MWST, that time we can link this one. It's already there. That means if you're going to create a tax procedure in future, sorry, in pricing procedure, you need to include this MWST. Or if you have taken something there, then you need to add it here for your country. Then tax relevancy of master records. That means on product we are going to calculate the tax, and on customer also we are going to calculate the tax. So define tax relevancy of master records, customer master and material master. Tax category MWST. One product is exempted item 0 or liable for tax. That means in future when we will create the customer, we have to select there as whether this customer is one exempted customer or taxable customer. And when we will create a material, there also we need to specify exempted material or taxable customer. So all these settings are there in the client, in this client. No need to do anything, just for your information I shared. Okay, now add this zero tax code or any specific tax code, default tax code to your company code. So go to configuration, logistic invoice verification, incoming invoice. Here one option is there. Yeah, maintain default value for tax code. New entry, add your company code and add your default tax code. Suppose I want to take this as my default tax code for purchase, suppose. So add it W1. So that means when we will create the purchase invoice, system is going to take the default tax code as W1, whereas if you want you can change it also. Okay, now this configuration done, we can process our invoice which is pending. So now you have your open item is there. In GRIR account. So we have open items are there 12,200 in these two clearing accounts. We need to convert this account, or we need to raise the invoice. So what is the accounting entry for invoice? Now you have credit entries in the GRIR 12,000 and freight clearing 200. This is also credit entries. We need to post a debit entry, or we are going to debit the GRIR, and credit will be vendor. But here we have to add the tax also. So input tax will be debit 6% on 12,000, 1200, sorry 720. So this will be 12,720. So let's see this entry. So I'm going to raise the vendor invoice. Miro. Migo GR Miro. Incoming invoice or vendor invoice. Incoming invoice, company code W10. Enter your invoice date. Go to PO reference number. Posting period 6 not open. Okay, period not yet changed. First change the period. OB52. Yeah, it's 6. Still May is there. Change it to June. For non-leading also. Go to purchase order. You can see here the default tax code is W1, 6% because we have assigned there. Activate this one. In company code WM10, number range 51 is missing for 2018. So number range 51 is for vendor invoice from document type. For document type, it is RE. How it is missing? Yeah, it is missing 49, 50, 51. Add it. Vendor invoice number range. This one. Maybe some issue with today's server. Document type RE. This one. 51. Also, I will add one more number range because next step we are going to post directly FI vendor invoice. So for that I need the number range for KR 19. Vendor invoice 19. So both the number range I'm going to add here. 51 for integrated number range, integrated document, and direct posting KR. One. Why overlapping here? 51. We can change the number range, but provided that the slot should be available. Here I just check here the document, only one document is posted, that's why I changed it. But if it is already some document already posted, then we can change it. '19 also direct posting. Go to PO reference. What message is this? So add the purchase order number. Then what cost it is. So it's the goods and service item. Allowed posting period 5 2018, 4 2018, 12 2016. The posting date is not within one of the allowed posting period. System. Okay, I got it. The period is not yet changed. We only changed the FI period. Okay, 5 2006 2018. Go to MMPV. First check which period is open. Posting period. Company code WM10. Yeah, it is 5 is open, right? So we need to change it to 6. PV. Period we want to open 2000. Period 6 and 2018. Run it. Yeah. Go to PO reference. Add the purchase order number. If it is everything goods and service in one invoice, then you can select this option, goods service item, planned delivery cost. But I want freight should be non-taxable item and this is taxable item. So select goods service item. Manually, I'm not updating anything. I've just entered the purchase order number and run it. Click on adapt. So amount included 720, tax calculated on the basis of our configuration, and this amount is vendor credit amount is 12,720. Okay, here we are getting error because debit is missing. So add the debit amount. Now it's 0. We are getting one message, specify the baseline date, because baseline date we have not yet configured. That I will configure during payment terms. What is baseline date? I will explain there. Baseline date is nothing but from the date the due date is calculated. Right now you just take the invoice date as baseline date. In payment terms we will configure, and ignore this part because we have not yet configured the payment terms for early payment, cash discount. So just ignore this part right now. Simulate. So here vendor we are going to credit with, this is the vendor, we are going to credit with 12,720. GRI account we are going to debit, and input tax account 720 credited. Post it. From purchase order, we converted the invoice. Purchase order to GR, GR to invoice. Okay, document generated. One more is there, right? Complete that also. Default is W1, but we want it should be 0 tax. Go to purchase order, change this item to delivery cost and add the purchase order number. $200, 0 tax because it is non-taxable item. Vendor credited, freight debited, post. Now you will find the vendor line items there. FBL 1N. But before that, let's see the GRR account. It should be converted into 0. Zero balance, zero balance. So first we have posted the credit entry, now posted the debit entry, but this still in the open item because we have some configurations are pending, that is GL clearing line items. So that's why open items are there, but you can see the balance is 0. So when we will do the year-end activity, that time we need to convert that. So it should convert into 0. Okay, so let me show you in a different company code where the complete configuration is there. Just check the GRR account. See here. No, here it is also pending. Which account we did? Okay, you can see. So before closing the financial books account or preparing the profit and loss balance sheet, we need to clear these accounts. But right now, if you'll see, the balance is 0 only. That means no open items are there. Sorry, open items are there, but no accounts are, unreconciled accounts are there. Then where about the where we will find the credit entries? This is the posted the debit entries. You will find the entries here in the vendor line item. Accounting, financial accounting, accounts payable, account, FBL 1N, FBL 3N, GL entry, FBL 1N. $12,720 credit entry, RE document type because it is integrated document. 200 also vendor credit entry. And if you'll see here, you will get the complete picture. Go to document. So original document is your vendor invoice. Miro. This one we processed. And if you click here the follow-on document, you will get the accounting document also. This is your invoice entry. And from here also we'll get the accounting entry. So GRR credited, GRR debited here, previously credited, tax amount debited, and vendor credited. Posting key 31, 96 GRR credit, GRR credit 96, now debit entry 86. This is your credit entry related to tax. So it is the complete picture. We started from purchase order, only the payment is pending. Once we'll make the payment, then it will be completion of P2P. Purchase order, then GR, corresponding accounting entry, then invoice, corresponding accounting entry. Now let's see from table point of view. How many tables are updated here? And also one more account is updated here, that is the reconciliation account. Accounts payable. So I told you whatever the transaction we will post with subledger, you will find the same entry in the accounts payable or reconciliation account. So 12,920. Now here the transactions with one vendor. So that's it there. Once we'll keep on posting with other vendors, you will find the accounting entries here also. Now table point of view, what are the tables are updated here? One is your BKPF accounting header. Then BSEC, how many BSECs are there? 3 BSEC. 12,720, one more 12,000 and 720. But we need the open item. We want to see the vendor payable or open items. In open items, two more table updated. That is your BSIK. 12,720 and this is 200 BSIK. So only vendor open item. Whereas in S4HANA, everything will find one table, that is your universal journal. But here it is, multiple tables are there. Let's verify. So what is the document number? Document number 514 which is one derived document, and one more is 5100001. Let's see these two documents. These are your vendor invoice. Go to SA16, check the table. One is your BKPF, the accounting entry header. Document number 51 4 times 0 51. This, run it. I have not selected the company code. Okay, both are your Miro entry, vendor invoice, and it is updated. Then BSEC, K vendor item. So two vendor items, 12,720. These two items you will find in the BSIK. 12,720. This is the credit entry 200. These two are ledger. GRIR ledger. Tax is also ledger. Ledger. And this is your freight clearing. Both are ledger. So 12,720 vendor item, and you can see this is a tax code W1, and this is zero tax code. Okay, this is your credit entry, and these are your debit entries and corresponding account. 31 is your posting key, 86 posting key, debit, this is debit, 31 vendor credit. So it is updated. Then only open item, BSIK. This is known as index table. No tables found, BSIK, yeah. Maybe wrong document number entered. Okay, so 12,720, 200. So if you only want to run the report open item, so better we can run it, or when we are going to execute the open item report, system is going to take the BSI key table. That means this is the report. Accounting, financial accounting, accounts payable, info, reports, vendor items, list of vendor open items. I just enter the company code and run it. So 2 line items are there. From where? BSIK. So we have seen from functionally and technically also.